The Mexican peso has been banging back and forth in a consolidation pattern for a few weeks now. I think it's going to drop. Hang around and I'll show you. Hi, this is Tim from TradingStrategyGuides.com. I hope you caught the Trading Education Series video for this week. Look for them on Wednesdays. Today's trade pick is a continuation triangle on the US dollar Mexican peso forex pair, and we're going to look at that in a little bit. But first, we've got quite a few open positions, and we'll check them out. And then later on, got another brand new trading maxim for you. It's another long one, but an important message. Does anyone know what day it is? Actually, I think it's Friday, right? Actually, the only way I keep track of the days is the video workouts coming from my CrossFit gym every day. They actually tell us what day it is. Remember to click the subscribe button and hit that bell so you won't miss any of these great trade setups. Let's take a look at the open trades. Well, the first one we're going to look at is Palladium. We got our sell signal right here on Tuesday's close. And I got short at 1932.46. My stop loss is 21.74.22, and my first target 17.71.29. Now it's a waiting game. Here's the Euro New Zealand dollar forex pair. We got our signal on Tuesday's close right here, but the volume was only 86%. Let's see, that was this bar right here. 86% is not enough to get a full-size position, so this was a half-size buy. It closed back inside the bull flag yesterday, so I took my loss. And because the volume and the volatility are still continuing to decline right here, I'm redrawing this bull flag for another try at this. And here's the new setup. This pink flag down here is the old one. This blue one is the one that I redrew. I actually like the way this channel matches the candles on the opposite side of the channel better than the old one did. The rest of this is the same as before. We're going to buy a daily close above this bull flag. Here's the Litecoin, Bitcoin, crypto setup I told you about last Friday. It closed below the range right here yesterday, so I sold it around 57.42. That's 0.005742. Stop loss of 60.39. First target of 55.44. It's pushed back up into the consolidation here, but it looks like it's pushing on back down. So we'll watch this. Closing is at, I believe, 7 p.m. New York time tonight. We'll see how this does. If it closes back inside this range, we'll take the loss, and then we'll figure out what to do after that. Just like the Euro New Zealand dollar, McDonald's faked us out. We got our signal right here on Tuesday's close. It was a pretty wimpy candle. The volume was only 78% of the average, so it almost didn't make the cut, but it was a half-size sell. Then it closed back inside the bear flag right here on Wednesday, so I took my loss. And just like the Euro New Zealand, the volume and the volatility continued to drop. So I'm redrawing the bear flag for this one, and we'll take another try at it. And here's the new setup. Again, the pink flag back here is the old flag. The blue one is the new flag. I've included this candle, this whole candle, in this new flag. And this new flag also seems to match the opposite side of the channel much better as well. So that's good. Same trade management. We're going to sell a daily close below the bear flag right here. Okay, so let's take a look at the US dollar Mexican peso right now. Here's a daily chart of the US dollar against the Mexican peso. This is what is known as a continuation triangle. It's so called because it typically breaks in the same direction as the incoming trend. You can see that it has a very strong incoming trend right here, and then it just starts banging back and forth into this ever-tightening spiral. So at the risk of being Captain Obvious, I know I do that a lot, just in case you don't get the title of this video, I'm anticipating the USD Mexican to break to the upside, which means the peso will be going down against the US dollar. Even though it will typically break in the direction of the incoming trend, in this case up, I will still take a break in either direction. And as a nice confirmation of the consolidation, we have a decline in volume and volatility right down here. The volatility, of course, is the amount of daily movement of the price, and I measure it with the average true range, or ATR, which shows the average length of the last 14 candles. And here's the trade plan. We're going to buy a daily close above the triangle or sell a daily candle close below the triangle. On the breaking candle, to enter a full-size position, we want to see the volume bar reach up here to the volume average. If it doesn't quite reach the average, but does reach 75% of the average volume, I'll take a half-size position to reduce risk. You can calculate the percentage by taking this volume number here, dividing it by this volume average, and you should get 0.75 or better as the result. If you don't get at least 0.75, then I suggest you stand aside on this trade. The stop loss is 1.5 times the ATR. First target is 1 times the ATR. So let's say this thing goes ahead and breaks out today, and it gets up to here, and there is our buy position. Look down here at the ATR on the day it breaks. Multiply that by 1.5. Measure that distance behind the entry, and that'll be your stop loss. Measure 1 ATR above your entry, and that'll be your first target. If after entering the trade we get a candle close back inside the triangle, we'll take the loss right then and not wait for it to hit the stop loss. Our intention is that a breakout of this consolidation should be explosive and hit our target fairly quickly. If the momentum goes away, we want to shut the trade down without taking a full stop if possible. When the price hits our first target, we will close half the position for profit and set the stop loss to break even on the remainder. We'll then follow stops as price moves in our direction until the market takes us out. These two rules are the very definition of cutting your losses and letting your winners run. Typically I do this using 2 positions. The first position has a stop loss and a take profit. That position will close automatically when the first target is hit. The second position will only have a stop loss, and that's the position that will be allowed to run. When the first target is hit, we will have to manually move our stop loss up to break even on the second position. I will only risk about 2% of my account on each trade. And that's today's setup on the US dollar Mexican peso. Remember, my intent here is to tell you how I manage these trades. If you've already got a good trade management plan, use it. Things that work for me may not work for you. You have to understand your own mind to find the best strategies for your trading. And speaking of understanding your own mind, that's my intent for the trading maxims. The maxims help me control my emotional impulses and keep me on the straight and narrow path. A maxim is a general truth, fundamental principle, rule of conduct, or a proverbial saying. The purpose of my maxims is to motivate me to discipline in trading as well as other areas of my life. I suggest you start your own list of maxims, things that you can say to yourself while you're trading or doing life to make sure you always do the right thing. Feel free to borrow from my list. And today, another brand new maxim for your list. Tim's Trading Maxim number 73. With everything that has happened to you, you can either feel sorry for yourself or treat what has happened as a gift. Everything is either an opportunity to grow or an obstacle to keep you from growing. You get to choose. And this quote comes from Dr. Wayne Dyer. Wayne Dyer was a self-help author and motivational speaker. His book, Your Erroneous Zones, is one of the best-selling books of all time with about 100 million copies sold. This is my favorite concept, and many of my maxims follow it. The idea that you can't control what happens to you, but you can control how you respond to it. I'm not saying you should be happy-clappy about everything. I'm just saying that you can decide to grow or stagnate. Trading will hit you especially hard in this area. You have to be thick-skinned and be able to take it and keep moving. You have to be like a Timex watch, which takes a licking and keeps on ticking. I think I just dated myself, didn't I? I don't think I've owned a Timex watch in a whole lot of years, but I digress. Remember, we either win or we learn. There is no losing here. Your psychology is your most important asset as a trader. Keep going. Never quit. Remember our US dollar Mexican peso trade plan here. We're going to buy a daily candle close above the triangle or sell a daily candle close below the triangle. If the volume is not quite average, go half size as long as it's at least 75% of the average. Your stop loss is 1.5 times the daily ATR, and your first target is 1 times the daily ATR. And remember to click the link below to the trade management video for more details. Also remember to sign up for my free Trading Picks email list so you don't miss any of these great picks. I send out about 2 or 3 trading picks a week from all different markets, and you'll get to see them first. And the best thing is, it's free. I'll put the link below this video. And be sure to come back to Trading Strategy Guide's YouTube channel every week on Monday, Wednesday, and Friday at 3 p.m. U.S. Eastern Time for my new videos. Don't hesitate to ask any questions you may have. I'll either answer your question right in the comments or in a training video, or both. And remember, the only stupid question is the unasked one. And don't miss the next installment of the Trading Education Series next Wednesday. As always, thanks for watching. Thanks for subscribing. Don't forget to hit the thumbs up below. Have a great weekend, and I'll see you Monday.